Dear Mayor of Piraeus, dear Chairman of the ICS Greek branch, dear ICS members and students, ladies and gentlemen, good evening. Today, I am delighted to welcome you at the 8th Annual Forum of the Institute of Chartered Shipbrokers Greek branch. As most of you know, the ICS is an internationally recognized professional body representing ship owners, shipbrokers, ship managers, and agents all over the world. With 26 branches in key shipping areas and 5,000 members, the ICS network connects the professional shipping community. The Institute of Chartered Shipbrokers contributes in the process of training and education by providing to its members and course participants the most updated and well-designed methods of maritime training in the areas of chartering, operations, legal and finance, but equally promoting the highest standards of professionalism and ethics in line with our motto, our word, our bond. To that effect, the ICS became a synonym for high-level education and training in shipping business, while the ICS membership is a mark of competence for shipping professionals worldwide. Having said that, our annual forum, on its 8th year now, has become an institution, and I would like to thank you for your continuing support, giving us an extra motivation to continue our commitment in raising professionalism of the next shipping generations. Our annual forum comes at a time of depression for all areas of the shipping industry. A slowdown in the global economy, a continuing financial and banking crisis, oversupply of ships have all combined to reduce earnings and values, causing problems for owners, bankers, brokers, and other areas of the shipping industry. In such times, we need a forum so that ideas and opinions and information can be exchanged, discussed, and even debated, so that strategies can be formed, if not solutions found. Shipping, especially in Greece, is a business that focuses on the long term, as wisdom is passed from generation to generation. We hope that this evening ideas can be shared and wisdom found, so that we can survive whilst we bounce along the bottom. And we firmly believe that opportunities and challenges are there for those that are well informed, educated, and prepared to dare. The title of the forum today is Bouncing Along the Bottom. Our distinguished speakers will expand on the above concerns and give us the opportunity to form an opinion about the current state of the market and its perspectives. At this point, I would like to welcome and introduce to you the distinguished members of our panel. Our chairman, Mr. Nicolas Tsavliris, Mr. Dimitris Anagnostopoulos, member of Board of Directors at Aegean Baltic Bank, Mr. George Xiradakis, Managing Director at XRTC Business Consultants, Mr. Ole Rikard Hammer, Chief Analyst at RS Platou Oslo, Mr. Simon Ward, Director at S&P Department at Hartland Shipping Services, Mr. Michalis Boudouroglu, Chairman and CEO of Paragon Shipping, and Mr. John Platzidakis, Managing Director of Anagnostopoulos Maritime Services. Our panel moderator today will be Mr. Leonidas Dimitris Eugenides, Chairman of Niver Line Shipping and President of the Eugenides Foundation. Ευχαριστούμε πάρα πολύ, κύριε Ευγενίδη, που είσαστε κοντά μας και χαιρόμαστε ιδιαίτερα γιατί από την πρώτη χρονιά της ίδρυσης του ICS όλα μας τα συνέδρια είναι εδώ και νιώθουμε πραγματικά μεγάλη αγάπη και πολύ φιλικά κοντά σας. Ευχαριστώ πάρα πολύ. Thank you very much for your attendance.
Ευχαριστώ για τα καλά σας λόγια. Αξιότιμε κύριε Δήμαρχε, dear Chairman of the ICS Greek branch, ladies and gentlemen, it is with great pleasure and honor to participate as panel moderator at the 8th Annual Forum of the Institute of Chartered Shipbrokers, Greek branch, and I would like to cordially welcome you all here today. I've been monitoring the ICS Greek branch as from its establishment, as you rightfully mentioned before, and admittedly, your committed work has added a new dimension in the training of the shipping community by giving shipping professionals the chance to improve their shipping knowledge in a highly competitive and business-oriented environment such as the one of global shipping. It is with great honor for me, as the president of Eugenides Foundation, that the Greek branch has chosen once more our venue for the conducting of its 8th Annual Forum in our premises. Last but not least, Greek shipping community can contribute through many initiatives into the new start of our country. We should concentrate into the recognition of the positive attitudes, ignoring the only few negative exceptions. Now, the chairman of the ICS Greek branch, Mr. Nicolas Tsavliris, will open the conference with an introduction to the topic. Mr. Tsavliris, you may proceed. Thank you.
Your Excellency, the Mayor of Piraeus, ladies and gentlemen, distinguished guests, a very warm welcome to the annual forum of the ICS Greek branch. I'm very proud that 8 years have already passed since it was launched, and the branch today is thriving. Economic turbulence, market uncertainty, and a lack of clear direction characterize the current state of the shipping industry. This state has determined the theme of our conference this year: bouncing along the bottom, opportunities and challenges in a shipping depression. I wonder, can we ever really know what exactly we are heading into? Or are we always trusting in fortune? There are two diametrically opposing views prevailing in this market. It was said at the Marine Money Greek Forum conference in October that cash-rich owners are timing their reinvestment decisions, and private equity is taking a closer interest and closing deals. The year ahead looks set to be one of tremendous opportunity. There has been a structural change in ship finance, which has been caused by a combination of more stringent banking regulations and currently weak shipping industry fundamentals. But the potential to reshape the ownership profile of the industry could begin the next cyclical upturn in 2013-2014. On the other hand, as Chinese shipbuilder boss Ren Yuanlin said recently, last year was grey, this year is black, and next year will be bloody. This year is the anniversary of the tragic sinking of the Titanic. A century later this year, the tragic sinking of the Costa Concordia occurred. I remember reading recently that the Titanic, had she not been lost, could theoretically have been allowed to operate today, as most of the updated modifications and regulations would not apply to her due to her age. That sounds far-fetched, but do we really learn from our mistakes and from our experience? Mere knowledge and conventional forecasting tools offer insufficient and sometimes inaccurate guidance. Before leaving the field to this truly excellent panel of speakers, we would like to thank all our sponsors for their continuing contribution and support at our events. Special thanks and appreciation goes to Mr. Leonidas Eugenides Dimitriadis, I think I got the name right, for hosting us once again at the Eugenides Foundation and for accepting to be today's panel moderator. Leonida, ευχαριστώ πάρα πολύ. Last but not least, many thanks to the ICS team for efficiently organizing and administering today's function. Ladies and gentlemen, enjoy this evening's conference. Thank you for your attention.
Now we call Mr. Dimitris Anagnostopoulos, dear friend Dimitri, member of Board of Directors at Aegean Baltic Bank, to the podium.
Good evening. Good evening, and I hope the mechanics work here. Okay. I would like to thank the ICS management, Natalia and Nicolas, as well as Leonidas Dimitriadis Eugenides, I got it correctly now, and for their invitation. And I will start by saying that since we have many distinguished speakers, I will try to say a few things to open the mind of the audience, as well as to the next speakers, for something that maybe Nicolas started being a little bit in his small speech hitting the point. Well, I would like to say a few things about what is happening today. Really, this is a really crazy and unusual situation in the world. Everybody is feeling that things are moving with no direction, and at the same time, to put some figures down just to realize where the world goes on in 2012. Real economy, the world aggregate GDP is today about 60 trillion. The world aggregate public debt is 180 trillion. It's already 3 times the debt of the GDP. These two gentlemen that have done most of the work of what is happening these days in the world. Mr. Greenspan was in 2000 until 2006, and he gave the big rein with the crisis of the 2008 in the States to Mr. Bernanke. The motto of Mr. Greenspan was easy money policy, and markets can be self-regulated. But derivative markets are 9 times the world GDP. You make the multiplication and you find easily what numbers we're talking today. In 2012, that amount is 20 times the world GDP. And the motto of Mr. Bernanke is supply money to ensure liquidity and keep interest rates at the minimum levels. If we go back to history a little bit, we'll see that in 1971, 90% of the world economy came from the real economy, and 10% from mild derivatives, FX positions, and these kind of things. In 2012, real economy is about 10%, and 90% is derivatives. You can call it the way you like it. The result of this situation is that fewer and fewer people in the globe have access to wealth creation. Only 1/3 of the world's population have access to that wealth. Food, energy, resources, social welfare. World GDP is obviously unevenly distributed. Blend of these issues create local, so far, turbulences. In history, we've seen both peaceful and through wars, confrontations between nations or classes of people. The global monetary system is about 2 or 3% of the world population controls the world. Speculative capitals accumulate through various monetary transactions, large wealth for the few, in the detriment of the people that have no access to them. We have regulators to regulate the money markets and to prevent not to abuse, banks' behavior. But regulators so far have proved by majority to be part of the monetary system, thus not allowing any kind of effective reforms. Who and how can resolve these imbalances? Politicians, real leaders that so far lack in the 21st century. These politicians should confront bankers and put back on track the world monetary system before it crashes through either big or small bubble bursts. It's amazing that when derivatives were invented and the world went out of the gold equivalent that was measured the wealth of each country, the little bear came out of the cage. Now the bear is too big to be put back in the cage, and that is the difficult work of the politicians, that they have to face a very, very strong monetary system. The first step of this redistribution of wealth is the Tobin tax. Everybody talks about it. But just to know a little bit about the numbers, to see how this could work, it's estimated that 1 pip imposed on any monetary transaction could produce, for instance, for the European Union, only about 400 billion per annum. If you make 2 pips or 3 pips in every transaction, you can easily calculate the billions and the trillions eventually. Tobin, who was an economist, was born in 1918 and died in 2002, but nothing so far has happened. There is very strong resistance, and politicians cannot make the right attempts to redistribute world wealth. Where shipping stands. Shipping has a real economic component. There are real assets run by dedicated specialized people and that transport around the globe real products and commodities. It is an estimation that about 85% of shipping companies, the net worth of those companies, is reflected by tangible assets, vessels mostly, and various products of real added value. Maybe the other 15 is that some of these shipping companies, they have been surrendered into various FFAs and various other paper-related products. Greeks, by majority, have traditionally mastered freight depressions, actually benefiting from those better than anyone in the world. Any depressions that like the ones that benefit, despite temporary freight revenue reductions, are the ones that act with basic business principles within the real economy, like the old captains. Greek shipping also is fully insulated from Greek sovereign risk. That's more than obvious. There are some prescriptions of what to do. Timely buy, timely sell vessels, not to grow above your means. Low or not at all leverage. It is surprising that more than 50% of the Greek fleet, Greek owners, are either debt-free or very low leveraged. We don't hear about these names, or maybe we hear sometimes. They're very modest, but this is the basic, strong backbone of Greek shipping. Not too heavily rely on other people's money, banks and capital markets, and if so, at very low possible dependence. Keeping tight grasp and control over your company's operations. History repeats itself. We must read history. For us that we've been around for more than 35 years in the industry, we've seen ups and downs, and we've seen behaviors of shipping companies and shipping magnates, the way they've been up and down. Make always sure that in any worst-case scenario, the company can stay liquid and afloat. Be cautious in entering the various FFAs, swaps, other hedging, in my view, are betting instruments that may lead to catastrophes. and be aware that greediness is really a bad virtue. So for the ones who have followed this type of prescriptions, market depression, inclusive of any bubble bursting of the world monetary system, is a good bond of opportunities. And that's the real strength of Greek shipping. Thank you, gentlemen.
Thank you very much. Very challenging, as usual. With great pleasure, we present our next speaker, George Xiradakis, Managing Director of XRTC, business consultant, renowned supporter of Panathinaikos. George.
Thank you very much, Leonida. First of all, just to start a bit, not the usual way that I started, I have a round like some top singers are doing in the world when they say the speech, the round of Mick Jagger, they say in the past, that it goes the world concert round or whatever. So I'm so happy that in this round here it found me in Greece, and not in China or in Europe or in the States, to give a speech to friends. Usually I am with the Michalis or with Voduroglu around. Now I'm with both of them and with many other of you. I have a habit also to dedicate my speeches, in particular when it concerns about shipping and when it are being offered in Greece. So this time, together with my team, Katerina Fitsky and Dimitris Dimitriadis, we decided to dedicate this speech to the lost 40+ young children that they passed away during a train accident in Egypt. That was a real shock for us. I remind you that we have been working about 5 years with the Minister of Transport in Egypt, and in a similar tragedy, it happened that the non-minister at that time, he resigned. But of course, it's not a matter of politicians, it's a matter of infrastructure. And I hope that no one, any other country, will feel another tragedy like this. It is painful, I'm telling you. I spoke with Egypt, it is awful. So in any case, if Captain Anagnostopoulos was going to be alive, he was going to force all of us to speak in Greek. This is my answer to you all. This is why now, in the absence of late Vasilis Konstantakopoulos, we can speak in English sometimes in this conference. Otherwise, you would have had a translator to understand what we are saying. All right.
Να πούμε κάτι έτσι για να τον θυμηθούμε ότι πριν κάποια χρόνια ήταν ο κύριος Πετρόπουλος, ο οποίος μίλαγε στα αγγλικά και τον διέκοψε και του λέει «Τέντα, αγόρι μου, τα ελληνικά σου είναι πολύ καλύτερα από τα δικά μου αγγλικά». Οπότε εκεί που έκανε το presentation ο Πετρόπουλος τον έκοψε εντελώς και ξεκίνησε να μιλάει στα ελληνικά.
Καλά το θυμόμουν. So, can the rock bottom be softened? This is the issue, and this is what bouncing means. Πώς δουλεύει αυτό, ρε παιδιά? Okay. What is our mission? In order to receive a mission, it is the general that is talking. Success in how high you bounce when you... success is how high you bounce when you hit bottom. Wrote George Patton. Simple matters. There we are. Shipping is under siege. Siege. Sezi. Whatever it is under polyarchia. So according to Wikipedia, siege occurs when an attacker encounters a city or fortress that cannot be easily taken by a coup de main and refuses to surrender. However, shipping was not attacked by a coup de main, but refuses to surrender. No one came suddenly and tell you that here, now, today, you are going to have a crisis. We knew it from the party times. We knew it well from 2006, 2007, 2008, even before Lehman Brothers, and we were expecting it. It was not sudden for us, and we are prepared. Not only the Greeks, all the shipping people. Okay. So the shipping financing, as I am the second speaker, distinguished as they said, to speak about shipping financing, I'm telling you one thing, that shipping financing is almost in the rock bottom. What is shipping financing? Because, you know, for the journalists, it is very easy to write about the capital markets and about the listed companies just because they are more transparent, or they are releasing these nice press releases every quarter, every month, or in any development. But mainly, shipping financing and the shipping financing is coming from the banks and not from the capital markets. We have as well the private equity, which is another big contributor to what we call the big basket of investments within shipping. Here you can see how important are the banks for the market. Certainly, I'm not having any problem with the capital markets. To the contrary, as you know, I'm in two different shipping companies that are listed in US stock exchanges. But certainly, the big weight of the financing in shipping is coming from the banks. And here is what is happening with the global marine finance volume. Look at the mountain of 2007 and 2008, how we reached and this million and billion of dollars that were given to shipping companies to conclude their own building programs, to fill up the... Welcome. Καλώς ορίσατε. Καλώς ορίσατε. Σας περιμέναμε. Μπράβο, μπράβο. Ωραία, Είμαστε μια παρέα εδώ πέρα. Μην φοβάστε. And how we reached the bottom in 2008, when it started actually the real crisis. Of course, with two effects. One is that the reduction of the monies borrowed by the by the shipping companies, and the other, the number of deals. And certainly, another big hit, it was the syndication market. But as far as if we will see all the machines working together, we have, as we said, the equity, the bonds that contributes to the investment. Look at what's happening. It's another important change, a shifting of the power from the west to the east. If you can see, for instance, is the red are the Asian capital markets, and the blue are the European and US capital markets, mainly US capital markets. Look at, on the equity side, how much the Asian markets increased, almost triple their exposure within 1 year only, and if we have the statistics for 2012, it's going to be much higher. And at the same time, where the bond market is monitored mainly by the US. Κύριε Τσάκο, εδώ είναι η θέση σας, εδώ είπαμε. Μου είπε η κυρία Μαριόλου, εδώ να σας βάλω. Εδώ. Εγώ είμαι host αυτή τη στιγμή, εκεί. Στη μέση, γιατί θα μιλήσετε μετά. So, we have a reduction of 28% for European and the US capital markets, and we have an increase of 52% for Asian capital markets. This is another big development. And the number of banks, more or less, they remain the same as they used to be in the last decade, the big shipping banks. We have 40, but many things have happened with these banks. But if we can see now, today, who is giving money to shipping globally, and I'm not talking about Greek shipping, again, we go somehow 30 years ago or 27 years ago, when we had Japanese banks heading the list. It's the first time after so many years that we have Mutuo, we have Sumitomo, we have Mitsubishi, and in the top 10 list, Wells Fargo is again into the picture, where, if you remember in the past, they were monopolized by European banks. Now you have Americans and Japanese again. Americans and Japanese. Another effect is the mountain of spreads. Most of the big names, and not most of the middle and big names in the market, even in Greece, they never thought signing a loan with margin of more than 1% 10 years ago. Now, there is not even thing about such a small margin. The margins of the banks has increased by 300, 400, even 500% for the same companies, for new loans. Therefore, the sky is the limit. It's increasing, it's increasing, it's increasing. Of course, there are some big names or whatever that they stop somehow in the middle of this stairs. But there are others that they have to follow, because otherwise, if they don't have to follow and pay the margins, they're going to just fall down, lacking of liquidity. What has changed since the financial crisis? In the run-up to 2007, some banks used to use the wholesale markets to source a proportion of their deposits that they lent to businesses. Money was relatively inexpensive. From 2008, with the dramatic freezing of the wholesale markets, this source of funding proved much less attractive. This has increased demand for other, more traditional funding sources, such as retail deposits. In turn, it has increased the cost of banks, raising banks to lend. Banks have also been asked by regulators to raise deposits over longer terms that they have historically, and to hold greater liquidity buffers against unforeseen circumstances. This nice name, Vasiliki, that we call in Greece, and you know, it is wonderful, and we touch the Vasiliko, the plant, and it smells. The Basel 1, 2, 3, 4, whatever, the Basel 69 is going to bomb the market. Anyway, here we are. If someone asks you, where is the debt in shipping, is a piggy box in the middle of the ocean, surrounded by sharks, and someone has to be very, very clever to go on top of this and get 1 penny. And everybody is trying to stay afloat. These are the phases. What is happening? What has happened? Why we reached this point? First step, it was the crisis in 2008, in September. Then shock, fear, awful situation. Then, after the shock, we have the first restructuring requests. Those restructuring requests discussed in February 2009, they continue for about 9 months, and we have the first phase of restructuring. Then we had an optimistic market the first quarter of 2010, and many of us, Greek shipowners mainly, and Greek bankers believed that something was going to happen good. We have some new orders made in the first quarter and the second quarter, but of course the brokers are going to tell you better than me. Then, in September 2010, we have the realization for deeper and longer restructurings. Again, the market went down. Then we reached the second phase of restructuring in 2011. And now where we are? In the absolute stagnation. We are in a question. We are in the third phase of restructuring or on the sale of our portfolios, the bank's portfolios. Do the banks show fatigue from the long period since Lehman Brothers collapse? That's the question. Look at what it happened, full of bombs. Basel III regulations, banks' top management perception. If you go as a shipping financier to the top management to say that you have to support the little Greek ship owner that he has given us so much money over the last 20 years, the top manager is going to tell you, you know something. The government, the European Commission is telling me to support the people, to warm up the local economies. What are you talking about now? These big tycoon Onassis and Niarchos, etc. I don't want to say about names that they are currently in the lead of the market. Increased cost of funding, we spoke about it. Distressed fund onslaught. You know, all these distressed guys are going around and say, they knock the doors of the bank and say, I want to buy your portfolio. I want to buy this. I want to buy the other. Ship owners' liquidity decreased. Don't think that the ship owners that they made money, so much money, as we said, in 2000, in the high cycle, between 2000 and 2008, they kept all their money. They have placed the money. Where they placed? In some stocks, in real estate, in somewhere. All these assets, the value has decreased significantly. And of course, we have the shipping cyclicality syndrome that no many bankers can understand unless they are specialized like Dimitris and myself. Some others, they cannot understand. Those that are financing Coca-Cola and the medical sector. And this is the issue. What is the effect? Effect number one. Do you remember Margarita? I love you, you love me. Huh? Kire Chaco, you remember it? Huh? Kire Komnine, that you are older than me? Much, better, eh? Huh? So this is the plucking the daisy flower. It was not easy for me to find the English way. Thanks God, the guys at home. Ελάτε κύριε Πρόεδρε, περάστε, αργήσατε. Έλα, πέρασε κι εσύ. Έλα, πέραστε, έλα και εδώ έχουμε θέσεις. Μην κάθεσαι όρθιος. Μετά την Κωνσταντινούπολη, εσύ τώρα είδες την Αγία Σοφία, εδώ είναι στενά. So, he loves me or he doesn't love me. He loves me or he doesn't love me. This is what we are saying. Look at what is happening in shipping. Banks. Look at how such a big daisy flower, Margarita. Margarita in English is the alcohol drink, but in Greek is as well daisy flower. All right. So how many banks are in there? Next step. Less the banks that have ceased or pull out shipping. Look at the difference. Tuk, 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 tuk. Okay? And now, less the inactive banks. But don't believe that all of them that they are here are active. They just come to the conferences and they say, no, still we can give. We can give, we can give. But where they can give? Only to the existing clients and only to the major existing clients that they have put other assets in the banks. This is mainly the situation. So, look at what it happened to our daisy flower. It is almost half, and most probably in the future, if we will continue like this, it's going to be nothing. Effect number two. Who is the white knight that will save shipping market? Or Potis? Who is going to be? Certainly it's not going to be white. Most probably it will be either Japanese or mainly Chinese, even if he is a Greek one. Chinese, I'm telling you. You can see, I mean, it is very easy for you to understand that from the left side it is China, nobody knew this, and from the right is Japan. More aristocratic than Japanese. You can see there other type of weapons. Effect number three. What are the banks are doing now? Shock. They try to maintain their relations. If they have small budgets, they are serving existing major clients. They are preparing themselves for the wars to come, and shipping divisions try to keep their businesses running, while some others they withdraw. But the most important is that they are busy with restructurings. Therefore, restructuring division is the new shipping colleagues, is the new shipping division. And ultimately, the nice, handsome shipping guy like Dimitris and myself has become a skadzochiros that has to try to save its clients. Πώς το λέγαμε το σκατζόχυρο? Αυτό. Just a second. This is why we are together.
Porcupine.
Έτσι, αυτό είναι. Δεν το γράψαμε και σας το έλεγα. Γράψτε το κάτω. The essence of the restructuring is to provide flexibility to the ship owners to manage their assets and to the prevailing market conditions in order for the business to be an ongoing concern. The danger still is ahead. You see the stamp as well. What has to be done in order to avoid repeating restructurings? Certainly, the first and most important thing is to clear bank strategy, offering long-term commitment to the sector. How we can do this if we adapt the last three? Close monitoring of the relationship with clients. The banks now, they have to be every day next to their ship owners to understand what's going to happen, not tomorrow, but in the next month. And at the same time, the owners, they have to make banks understanding what's going to happen next month. This is what we call transparency. And above all, we have to go back to the principles of what is credit, is trust. What will happen should the banks cease the restructuring? Liquidation. When liquidation? In a poor market, you can see how many the second-hand sales. Nothing. Look at the volume, total vessel sales, how it went down. Look at the number of sales. Therefore, thunder actions should be avoided, otherwise everybody's going to lose. There is still, and it is very important, you are not coming here just to see and write in your CV, the young people that you are here from ICS, that you were in this conference only, but all of us, we have to have something in our mouth. And we have to show something to the global market, the global banking regulators and governments, to address international shipping financing as exception in their imposed regulatory restrictions. Shipping is not yachting, is not ouzo drinking, as the Chirac was saying 10, 12 years ago, is a risk. And above all, is a necessity for the world economy. And all of us, bankers, ship owners, lawyers, brokers, or whatever, has to have this in their mind. Allowing banks to find, through these regulations, to find amicable solutions with their clients in order for both parties to bridge the troubled waters. Otherwise, it was a thunder. An industry that links the supply chain is an industry worth fighting for. Shipping είναι ένα κοινό αγαθό. Translate. Ένα κοινό αγαθό. Shipping has to be supported. It's not only receptions in Posidonia and in Norway and in China. If the ships will stop, most of the people, they won't have to eat. Most of the people, they won't have to be hit their homes. Most of the people, they won't be happy or they will be miserable. And this is the message that I want to pass you from here. And if you want to answer, can the rock bottom be softened? Certainly, it can. How? When ship owners and banks could bounce high if together. And you can see the Lateria, the springs under there, the dollars. If those two things, those two people, they will bounce together, then they can manage a lot of things. Thank you very much.
Well, quite illustrative. Then we're proceeding to our fourth speaker, and here follows the presentation of Mr. Ole Rikard, Chief Analyst of Platou, Oslo. Please, you have the word.
Okay, here we go. Thank you. Ladies and gentlemen, an honor to be here. Being a Norwegian, asked to come to Greece and talk about shipping, I'm very honored and proud to be here. My topic today is talking about some trends in the tanker market. And I believe, let's see here, here we go. Yes, and the issue before us is whether this market has any kind of cyclicality left in it. My answer, and ours Plato's answer, is definitely yes. But I want to bring up this first slide to remind you of the duration of tanker market cycles. They tend to be very long. The period of bouncing along the bottom can also be quite long, which is why we should focus on this slide. It also reminds us of the legacy of this industry, where we have very long lead times on the supply side on fleet additions and removals, and we have very short lead times on the change in the world economy. So that is the legacy of shipping as a special industry. On a general basis, however, for all markets, we have to remember that the news flow that influences our decisions tends to be pro-cyclical. In other words, the good news is always fantastic at the top of the market, which tends to encourage people in a certain kind of way. And the bad news is always at its worst at the bottom of the market, which tends to move them in another way. So it becomes self-reinforcing. So the question now is whether we have so much bad news already discounted in this market that we can begin to look at a bit of a cyclical upturn. We think we are approaching that period. But there are, of course, a number of potential sharks in the ocean, as we shall see. Our number one point here is to discuss the current situation relative to the past period of the 1970s and the 80s. And in our view, we have a much smaller degree of overcapacity in shipping. The 70s and 1980s, in our view, will go down as a truly spectacular period in shipping, in which we created a huge number of overcapacity, estimated here at more than 30%, and kept that overcapacity in the market for a long time. In the current situation, our estimate is that we have an overcapacity of between 5 and 10%. We would not call that structural overcapacity. We would call it cyclical overcapacity. And the good news is that for all the mistakes that we have made, we are seeing the industry responding to market forces, notably on the supply side of the market. If values and rates go down, you order fewer vessels, you build fewer vessels, and you begin to correct yourself. That is what's happening now. That is what was not happening in the 70s and the 80s. So we believe that our starting point is better. We are not in that structural overcapacity situation. One of the headwinds we are fighting, definitely, is what's happening with the world economy, which is in a weak mode, and that's also influencing oil demand. Here, the world economy is on the bars, and the oil demand is on the line. We are at less than 1% growth. But you should also think about this as maybe it is the supply of oil that is the problem, because tankers rely on oil transportation. Oil needs to be produced. And the problem now is that we are in a crunch in the global oil market where we are having trouble raising production. If you follow offshore, if you follow the oil market, you know that a lot of money is being invested in creating an increase in oil production. We believe that is going to come and become more visible in the years ahead. But right now we are in the low point where we have very little production growth that follows with high oil prices, limited trade volume, and weak growth in demand. We think that a change, an improvement in oil production is gradually going to come. A special factor now relating to this is what's happening in the US. US used to be the biggest client in the tanker industry. It's now probably the second biggest, close to the biggest, but it used to be the biggest by far. Now things are changing. This is a slightly complicated graph, but you should focus on the red line, which shows the annual change in seaborne crude oil imports into the US. And it shows that we have been going down almost every year by about 500,000 barrels per day. That is a huge volume. On the bars, you have the different reasons for why these oil imports have gone down. It's a function of demand in the US, which generally has been weaker. Production in the US is now shooting up to the stars, is very strong, and they are importing more from Canada on pipeline, which does not help the tankers. I've inverted some of these figures to illustrate, but you can figure that out later. The point is the red line, US is importing a lot less oil. Now, if you look at some forecasts, this is going to continue over the next 5 to 10 years. US is going to become a lot less import dependent. In our view, this can be questioned and should be questioned at the current point in the cycle. All of the assumptions on the US reducing its imports relies on assumptions on demand for oil, production in the US, and access to oil from Canada. All of these assumptions can be analyzed and should be tested. We think the world is going to be more dynamic in how the market adjusts, and we also think that a barrel lost on the US oil imports is not necessarily at all a barrel lost to the global trade. So yes, it's a challenge that the US continues to reduce its imports, but no, it does not go hand in hand with saying that the tanker market will be, demand for tankers will be destroyed over the next 5 years. A lot of assumptions on this graph, which we all should dig deeper into and question. And at the current point of the market, that's necessary to do, because for all the good things that you can say about the clever analysts, they tend to be wrong at the top of the market, and they tend to be wrong at the bottom of the market, because emotions that are created at these peaks distract the analyst from the core thinking of the fundamentals, okay? So the analysts, a lot of good things to say about them, but they are often wrong at the turning points. Now, going further on this and thinking about tanker demand, I want to draw your attention to tanker demand. Most of you, including myself, would think about tanker demand as an extra barrel produced and put onto a vessel. But that's only part of the story. When we factor in distances, which of course are extremely important, we factor in productivity, and we factor in vessel load factors, we factor in things like floating storage, you get a picture of tonnage demand for tankers, which is quite complex, okay? It's not just about the 1 barrel produced. So again, going back to what I'm saying about the US, I'm saying that a barrel less imported into the US is not the equivalent of a barrel less transported on the global market, because the global market is going to adjust. The players not selling oil to the US would probably sell it elsewhere. And listen to what is happening in the US now, where they are beginning to contemplate the possibility of returning to the crude oil export scene, okay? So the message here is that it's a dynamic situation which may offer some good opportunities, and the question is, are you at the current point in the cycle with a severe decline in tanker asset values, are you being paid to possibly take on some of that risk? And in our opinion, we are at least getting closer to a point where that may be interesting. I talked about the market's ability or lack of ability to adjust. In the 70s and the 80s, the market did not adjust to a drop in asset values and earnings. But things are different now. This is a graph showing the total tanker fleet as a percentage, the order book as a percentage of the current fleet. And we peaked at around 50% back in 2008. In other words, we did not need a financial crisis to bring this industry down severely. 50% order book is a phenomenally high number. The good news here, however, is how quickly this order book has been brought down. The market is responding to changing in the environment, and as has been very clearly said by my colleagues here, the banking side of this, of course, has played a huge role in bringing down, contributing to bringing down the order book. So now, on our figures, we're estimating the tanker order book at around 11%. You start to add together how big the tanker order book should be, given the replacement cycle of vessels, given the lead time of building a vessel, given the normal demand growth, you would get into that range. The tanker order book is being normalized, and it's happening relatively quickly. The last issue here that I want to talk about is yard capacity. This is a graph showing the new orders coming into the market across all sectors, and the line is our calculation of yard capacity. So into the 2000, we were running, the yard capacity was running behind the level of new orders coming in and had to catch up, and that forced prices higher. Since then, the last 5 years, yard capacity has been way above the level of incoming orders, which of course is creating downward pressure on prices. However, we are now beginning to see yard capacity beginning to adjust. Smaller entities, sub-suppliers are being cut off. There's been some closures. And we think yard capacity is beginning to come down. Again, we believe that is a sign of the shipping industry responding to market forces in a dynamic way and not staying in the same static position, which should be good news for the market's ability to begin returning to some kind of equilibrium. So let me close off by saying that we are not forecasting a sharp V-shaped turnaround in the tanker market. We think 2013 is going to be quite challenging. But in our view, we know that we have become quite low in the cycle. We think that there are good signs of the demand side of the market beginning to adjust. So we are beginning to put the pieces in place for a cyclical recovery in this market. We have a couple of headwinds, notably the notion that the US soon will become self-sufficient in oil. We think that could be subject to question, and those are the questions to be asked at such an extreme point in the cycle as we are in today. So let me close on that to think with some positive remarks that we think we are beginning to round off the bottom in the tanker market, and there is some possibilities going forward. But never, as ever with shipping, it's not a risk-free sector. All of you know that. So I wish you all the best, and thank you for your attention.
Thank you very much, Mr. Hammer. And now we're moving further with Mr. Simon Ward, Director of S&P Department of Hartland Shipping Services and fellow member of ICS since 1995. Mr. Ward.
We remain exclusive broker and retain an advisor for the HSBC Group for shipping matters. Sadly, that's also meant that I had to leave Greece, which was a great personal sadness for me, including leaving Natalia and the team. However, I will be a regular visitor, so you haven't seen the back of me. Anyway, end of the advert, on to the lecture. I've been asked to talk specifically on dry bulk and containers. I will do a brief tour of both sectors and make a few points along the way. It's not to analyze everything. I am a broker, so I'm not very good with numbers. But mainly, my points will come from a sale and purchase point of view. My opinions are not recommendations. Details without guarantee. Please bear that in mind. World economy, we all know what's happened. I won't dwell on this too long. I see the world economy as being driven mainly by three big engines: US, Europe, and Asia. So imagine them as cars. You've got the big SUV in the States, you've got the BMW in Europe, and you've got Lexus, let's be kind, in Asia. Yeah. In boom times, all three were speeding along. To a greater or lesser extent, some more than others. Fueled by easy credit would never run out. 2008 changed that, of course. The SUV of the United States stalled, and although it got back on the road fairly quickly, is not moving ahead that fast. The BMW, it kept going, but it's gradually ground to a halt, and it's now suffering from all the different mechanics trying to work out what's wrong and how to fix it. Asia, particularly China, keeps getting injections of high-octane fuel. But then it overheats, and they have to slam on the brakes, and then they have to overheat, and then put more engine oil in, and then go back again. So it's a bit of a stop-start situation. As far as shipping is concerned, the interaction between these three cars, or these three engines, is very important, because this is what drives trade. And this is particularly true in terms of the economy, in terms of the container market. The container market suffers when there's only one car on the road. We should have two at least. Since 2008, trade and cargo flows have radically adjusted. Size in the container markets, if nowhere else, does indeed appear to be everything. Relentless struggle for market share and economies of scale, efficiencies by larger operators, has led to an arms race in ship size and demand, leading to oversupply. If you look at the graphs, you look where the big percentage of the order book is, it's in the big ships. Larger ships grew. Most 70% of delivered ships are excess 8,000 TEU. The good news, 20% of ships scheduled to deliver didn't, and scrapping increased by 100% on 2011 levels, even by the end of September this year. This domination of the larger sizes is shown on the next page. Although 2012, 2013 are scheduled to deliver a large number of vessels, ordering for the minute has slowed, thank God. A bit of a no-brainer, I guess, considering the state of the market. But at least it's encouraging for the near future. It's about as encouraging as we can get for the container market. So container ship earnings, a double whammy of weakness of demand and a growth in supply. It continues to add downward pressure, and a two-tier market is emerging. You see 4,000 TEU routes, okay, the steady earnings, not spectacular, but there's a willingness to commit to longer periods. Smaller vessels, lower rates, short period, and at the moment, about, well, in excess of 100 vessels between 2,000 and 4,000 TEUs are lying idle waiting for employment. Size is everything, apparently. So, where are the opportunities? I would suggest that you look at the routes and not at the ships. If you consider what's happening to the change in trade patterns over the last few years, you've got new routes coming out. HSBC produced a very good report a couple of months ago called The New Silk Road, talking about emerging markets. This, translated into container shipping, is south-south, north-south. So instead of east-west on the traditional Asia to Europe and the Asia to the States, different trades are going out. And the cargo exchange between these developing countries will be twice the level of those between developed economies. So the trade out of emerging markets will improve, and it's not just to the developed world. Middle East, our friends down there, import and export exchange is 83% since 2005. Panama Canal is almost upon us. How will that change? No one knows yet. So, the idea for those investing in shipping is what ships actually fit these routes. Unfortunately for the speculator, liner companies are already investing heavily in these routes. As the bigger ships go into the traditional routes, particularly Asia and Europe, the previously large ships get pushed down. And so these are being already employed on some of the deep-sea routes. So the dilemma for an investor is, what do? Do you buy cheap, smaller tonnage and wait for the upturn? And wait means laying up. Wait means sitting around doing nothing. Wait means nothing. Or does it mean getting into the more expensive ships, achieving immediate returns? No. Expensive larger tonnage is always going to be at risk of the larger ships being cascaded down by the liner operators who have got them on long-term charters or who have them in their current ownership. So, container shipping, a bit of a dilemma. Dry bulk. I split the dry bulk section into two different sizes: industrial ships, the larger ships, and what I call emerging market ships. Helps to identify demand and trend, as well as volatility and growth. Generally, industrial ships, like the larger tankers, are more volatile. They get the upside and they drive market sentiment. The smaller ships are incremental in growth. They're always easy to fix. They're more defensive as an investment. But without the positive sentiment, they're never high earners. So, dry bulk profile. This is, compared to the container market, fairly good news. The order book is approaching peak deliveries, and in some sectors has already passed. 2013 deliveries are 50% of 2012, without slippage. Slippage is a big factor. The fleet is getting younger too. This illustrates where some of the problems still lie. Panamaxes, or rather Kamsarmaxes, which saw a boom in ordering in 2010 and 11, have yet to deliver and present a large bite of the order book at present. The figures are suspect, of course. Can anyone really imagine that 14.3 million deadweight of handies will actually deliver? I don't think so. I think the yards are too small and they're subject to cancellation by banking problems or even buyer problems. Good news for shipbrokers, certainly. High demo prices, bad freight market. The fleet profile is improving. Demolition is improving. You see the rates, the quantity of ships being demolished. It's good, particularly for the smaller sizes now. On to demand. Iron and steel. For industrial ships, the numbers are steady at best, but a slowdown in growth of industrial capacity means that it's not enough to absorb the new deliveries. 2012 global supply growth for iron ore was down 5%, from 5% to 4.1% due to falling prices. Iron ore demand growth is expected to reach just 2% in 2013. This does not absorb the fleet very well. Global steel production forecast is also revised down, reflecting contracting demand in the EU and a cyclical slowdown in China. Production will grow, and continued urbanization in China and the emerging markets will encourage that, but it's not booming. Thermal coal, seen as being the savior of dry bulk. And sure, new emerging markets need energy. Energy in the first part for the emerging markets is provided by coal. Supply is strong, however. And the US is an exporter as it moves to gas and produces more oil. Asia demand, thank God, is forecast to increase 10.7% this year and accounts for 67% of the world demand. However, there are problems for shipping. Look at these new discoveries in China. Okay, 4.2 billion tons, 1.4 billion tons, 2.5 billion tons. That's just in China, which needs it itself. 81 billion tons just found. That's not going anywhere on any ships. However, as a Chinese colleague of mine commented, these are very far away places, even for China, and present political and geographical difficulties. So it's not just turning up immediately. And bear in mind that in China, the majority of the capacity and the demand for coal and energy is on the coast. So ships will still provide. But it's a sobering reminder that demand isn't everything. Not everything gets carried by ships. Down into the emerging market. Again, this is, let's say, it's not spectacular, but it's steady. Emerging market economies are growing. They want to improve their lives. They want to improve how they live. So this means different things. Steel products, not the raw materials. It means forest products. It means agricultural products, fertilizers, cement, emerging markets, developing countries, where people want to live better. This is good for the smaller ships, because it's taking stuff into ports which don't have the capacity for larger ships. And they're easy to fix, as I said before. It's robust, but it's not spectacular. A few more graphs, you've probably seen enough already, but that gives you the stage of things. If you look in particular, the growth from how steady it is from 2009 upwards, this will continue. So, size again in shipping is everything. And we come here now to ship size. Capes. What's the best size for capes? 180 or 205? Where's the cargo coming from? Where's it going to? These are all dilemmas. Buy second-hand, invest in a new building. What happens? Supramaxes. New ships have now, for charterers building out of yards, are insisting on excess 60,000. Wasn't that long ago when Supramax was a big new ship, and we're getting bigger and bigger. Handies. Size keeps growing. We've gone from 28 to 32 to 35, and now we're saying 38. I would say with handies, dimensions are the key. Deadweight and draft are probably still more important than parcel size. And the old problem, Panamax, Kamsarmax, post-Panamax, Panama Canal's widening. How's it going to happen? Where's it going to go? You'll have noticed that I've concentrated a bit on handy sizes in emerging markets. We actually think that at the moment, handy sizes are the best defensive investment for immediate returns. And there's quite a few second-hand buyers out there that agree with us. As you can see, the profile is either one or the other. It's either very modern ships and the order book, or it's very old. This, for us, is positive for fleet growth, but it's also positive for a few other people as well. New contracting activity is dominated by handy sizes. Speed and consumption. A few points. This affects new building and second-hand demand as well as chartering. I've said that charterers are keeping rates down by comparing existing ships with one yet to be built. I would almost say mythical ships. They are the designs that have been floating around for all sizes in dry, wet, or containers stretch incredulity sometimes. And the charterers are taking advantage of this, and it's also dominating the second-hand market now. New building, they're marketing new designs to maintain order flow. Well, who can blame them? They need the business at the moment, and it's another reason to get a newer ship. However, it's significant that Japanese yards are only now releasing their eco designs. It is not insignificant that Chinese yards issued them first. Second-hand in the market, now where prices have gone lower, buyers overwhelmingly prefer Japanese-built ships. Real speed and consumption figures are being closely scrutinized, not just ones produced from a new building spec. How they actually perform is really important. And at present, buyers are preferring ships in the water. They want to know the real speed and consumption, not what the shipyard's telling them or what a yard can produce. Buyers will always wait until a ship is in the water before they can track new ships to see how it's gone. There's very brave buyers that get the new ships beforehand. So, opportunities. Some of you may remember the 3 golden rules for shipping investment. As I say, it's a shipbroker's view, so bear that in mind. Buy cheap. Buy cheap, that's pretty obvious. It's always nice to buy cheap. But buy cheap cyclically. We are now in a cheap zone, obviously. Buy what the charterers want. What do I mean by that? It means that the ship is easy to employ, that the ship can be fixed. Don't buy what a ship owner would want or what a shipyard would want you to have. Buy what the end user wants. Always have ships and money? Well, I appreciate that that's a bit of a challenge, especially these days. But what I mean by that is don't have no ships and wait for the bottom of the market, because you'll never get it. Don't have ships and no money, because then you suffer as people are suffering at the moment. And it's important to stay in the game. A few sector comments. Again, personal comments from me. I think capes probably good on the price. Buy modern, but be prepared to lay up. I'm not that positive on Panamaxes, Kamsarmaxes, Postmaxes, whatever you want to call them. Watch the stems, the cargo sizes, how that trend develops, and the order book. Supramaxes. Speed and consumption is a big issue for Supramaxes in particular. Size and quality will dictate price. At the moment, there is a really strong demand for Japanese-built Test 52 type ships. And there is quite a strong demand for 60,000 plus eco-type ships. Those caught in between, they tend to fall between the cracks. Handy sizes, don't be afraid to go a little smaller to get quality tonnage. What I mean by that is that this push for the larger sizes, from 32 to 35 to 38, it's, for me, a shipbuilding technique to push people to buy the next new thing. It's like, okay, I've got a 5 Series BMW, and now you've got to have a 7 Series. Or in my case, you've got a Volvo, you've got to go downgrade a bit. Anyway, the issue for me with handies is, again, deadweight draft is more important for handies in particular than it is for, to get the largest ship you possibly can. Because the larger it gets, the more like a brick in the water it is, and the more you suffer with speed and consumption. In the second-hand market at the moment, we are in a bit of a bubble. A little bubble where prices have stabilized and in some cases have increased. This is due to a limited supply of second-hand tonnage. Remember that even in the buyer's market, which is where we are at the moment in terms of price, there's going to be buyers competing with each other, and this creates, obviously, increases in price. Conclusions. For the container market, too soon to see a clear pattern of future growth. For me, anyway. World economy, and particularly East-West trade, needs to improve to drive sentiment completely. Package deals, probably the safest investment. Buy and lay up, however, may prove most profitable in the long run. Dry bulk, there's many buyers out there, and there's still lots of money to invest. It's a competitive buyer's market until more tonnage becomes available. For me, again, I think the yen exchange rate at the moment has a more positive or negative effect, depending if you're a seller or a buyer, than the freight market does. The weaker the yen gets, the more ships come for sale, the more the price will go down. One final point, nothing to do with dry bulk and container, but I think it is important both from a shipbroker's point of view and from a ship owner's point of view. Counterparty and intermediary risk will be crucial in this kind of market. Know who you're dealing with, both as a charterer, as a buyer, as a seller, and as a broker, because performance is key at the time, and choose wisely as you go forward. Okay, we'll leave that. I'd like to finish by saying that I think the shipping industry is a bit like my beloved Liverpool Football Club at the moment. We've had periods of great strength and success, followed by overinvestment and foolish purchases. We've had to get rid of a few of these foolish things, but with careful management, disposing of assets, even if they are below market value, even if you do make a loss, will help you grow together and carry on forward, we hope, to success. Thank you for your time. Sorry it's been so long.
Now thank you very much, very interesting. It's a great pleasure to present Mr. Maki Bonduroglou, Chairman and Chief Executive Officer of Paragon Shipping. Mr. Bonduroglou, welcome.
Καλησπέρα σας. Good afternoon. When I was reading this forum's title, I could not help but think how different shipping is to other industries. If we were, for example, in high-tech industry or in energy, and our business was suffering as shipping is today, we would probably be thinking whether our business is sustainable. We would be worrying whether we would be left behind by technological developments, more advanced than ours, or by climate change, etc. In shipping, we are not talking about that. We know we operate in a cyclical industry. We know we are in the bottom. We know the bottom will always come, as we know that the top will also come. So in the downside, of course, most of us are suffering. Earnings are very weak, but there are also opportunities because asset values are low. So what is the first question here? Where are we in the cycle? Are we at the bottom or not? Well, if we have a look at the history of the last few years, in the 10 years before 2003, the lowest spot rate was $4,200 per day for a Panamax, and the lowest asset value was about $14 million. And in recent times, we've seen $3,500 a day as earnings and $18 million for the value of a 5-year-old Panamax. Now, I don't know whether we are at the bottom, but we are definitely near the bottom. But I think this is not the most relevant question. The most relevant question is how long will the bottom last? Because this is what will actually separate the losers from the winners. Because, as I said before, there are opportunities in the downside, and Greek shipping in particular has excelled at actually creating value by investing counter-cyclically. So how can we predict the duration of the downturn? What is the downturn? It is, strictly speaking, an imbalance between supply and demand. When supply exceeds demand, then we are suffering. But the drivers of the downturn are not always the same. Sometimes the oversupply is created by a sudden drop in demand, and others, the oversupply is created by over-ordering of ships and gradual development of these ships in the water. And I think the former, the sudden loss of demand, is much more serious, much more difficult to deal with than the latter. Because when you lose demand all of a sudden, you have all these ships in the water, manned, ready to sail and earn money, and all of a sudden there are no cargoes. But when you create an oversupply because of over-ordering, then ship owners can have tools to actually smooth a little bit the crisis. You can defer, you can postpone deliveries, you can even cancel orders, or you can convert contracts to other sizes. If we take a look at the Aegean crisis in '98, we can see that the supply was not all that bad, but there was a very sudden drop in demand. From 5 or 6%, it went to below 0, to -3. Right now, it is clear that the problem is created by the oversupply, the over-ordering. The demand is healthy, over 5%, 5, 6%, but the oversupply is huge, and it is persistently huge over a long period of time. So the answer really is as to the determination of the duration, guessing the duration of the downturn is, as I said before, the order book. And the order book, unfortunately, stands today at 22%, but if it is any consolation, it was 75% 3 years ago. I like this graph a lot. It is a simple graph that explains what's happened in the past, and usually such graphs give me a little bit of confidence about what's going to happen in the future. Now, this graph superimposes the annual fleet growth demanded by the market, superimposed against the actual fleet delivered. And of course, as you would expect, the light green is good news. That's on an annual basis, by the way. That means that the ships delivered were less than the ships required. And the pink area is the bad news. It is when ships delivered were more than the market required. And of course, if we have a look at the period between 2005 and 2007, we see consistent light green, which explains the very strong market we had then. Post-2008, we see the pink creeping in, which actually more than offsets the shortages that were created in the previous years. But of course, the market held. Rates were good, were healthy. But unfortunately, beyond 2010, and as we speak, you see this big glut of red there, and unfortunately, this will also continue into 2013, and the trend will be reversed on an annual basis from 2014 onwards. Will the market correct in 2014? I don't know, but I don't think that the downturn will last only for a few months. It's not a question of a few months, it's definitely a question of many quarters, maybe a year and a half, maybe even 2. But what does that mean for shipping companies? The nightmares, the problems of ship owners today are debt and liquidity. And I would also dare to mention them in the reverse order. Liquidity first and debt second. And the market, the situation, of course, is aggravated because of the fact that we had a very strong market in the previous years. A lot of people bought very expensive assets, which meant, in most cases, over-indebtedness. If you take a look at publicly listed companies in the US, 30% of the listed companies have negative equity right now. Almost all of them have breached their earnings to debt covenants. 2/3 of the 2013 employment days of all bulk companies, tankers and dry bulk, are unfixed. So this means that these companies have not secured enough adequate liquidity. They have not secured employment for next year. And of course, if the market remains weak or even gets weaker, we can all imagine the liquidity issues that companies will face. Already we have seen companies filing for Chapter 11, shareholders losing all their money. Last week we had OSG. That sent a few shivers up the spine of financiers and shipping people, shipping investors. And I think that I'm afraid that we will see more of those to come. But today, as I said, the biggest challenge that companies are facing in order to weather the downturn is to actually achieve earnings that cover their break-even levels. And break-even levels can range a lot. They can range from operating expenses for an unlevered vessel. And I hope that my friend Dimitris Anagnostopoulos was right before to say that 60% of Greek shipping is unlevered, because this means that these guys are making money. They're generating cash, even in the downturn. And, but if you are indebted, if you owe a lot of money, then your break-even level goes up significantly. If you owe up to $15 million, for example, on a 5-year-old Panamax today, then you can meet your interest expenses and also pay some or even all of your capital installments to the bank, depending, of course, on how much your loan is. But if you owe more than $15 million, then you can't even make your interest expenses, and then I think these companies are in trouble. So on the basis of what I've been discussing, I would categorize shipping companies in 4 categories. There are those who have negative equity and negative cash flow today, and I think these companies will fail unless the market improves drastically and immediately. You also have those who have positive equity, but they have negative cash flow, and this means that they have to support their cash flow either by selling assets or talking to their banks, restructure with the banks. You have those who have negative equity, and there are many of those, but positive cash flow, and these companies can use surplus cash flow to pay down debt, or even possibly buy, if they can agree such an arrangement with the bankers, because that could be also a way out for them. And of course you have the people with the options here, the green category, who have both positive equity and positive cash flow. And they have all the options available. But I would say the most important thing today for a shipping company, the most important objective, is to have options to retain their ability to make decisions. What good is it, for example, if you want to buy, if you think that a sector will do well, asset values are low, you want to buy, but the banks will force you to sell. What good is it if you want to enter into a certain chartering policy and the banks will not allow you to do that? So retain the ability to be your own boss. For those who retain their ability to make options, and those would be the green category and possibly the yellow one that I mentioned in the previous slides. Let's have a quick look at what the funding environment is, because even in today's market, ships are still expensive toys. You need a lot of money to buy them. And funding can come either from private equity or companies' cash. It can come from capital markets for publicly listed companies. And of course, it can also come from conventional back lending, although very soon I think this will be an item for the museums. Well, private equity, to tell you the truth, a few years ago, if you asked me if private equity would invest in shipping, I would say not a lot. Private equity money is smart money, but it is also slow money. They want to ensure returns, etc. However, I was wrong, because in the last 10 years, about $16 billion have been invested by private equity firms in shipping. And I think in the current financial environment, this trend is set to stay and possibly increase further. The capital markets, are there capital markets for shipping? Well, the capital markets do not like shipping these days. Shipping is out of favor with public investors. Despite that, however, in 2011, we had 2 IPOs in the States and 12 follow-on offerings. This year, we had 1 IPO, 10 follow-on offerings, and almost $1 billion raised. Difficult, but still doable for a good deal. But of course, in addition to just raising money from the capital markets, publicly listed companies have also alternatives to raise money through other financial tools, like, for example, the high-yield bonds. And, in the last 8 years, $8 billion were raised in high-yield bonds, and this year alone, $1.4 billion were raised by way of high-yield bonds. Conventional bank lending, ladies and gentlemen, we all know that most banks are now closed for ship lending, and we are living through an environment which I call triple L, which means less banks, less clients, less money, but more expensive loans. Will this trend continue? I don't know. The bankers are more qualified to answer that, but I do not consider this situation to be bad. It's a good thing for the industry, for a medium and long-term interest of the industry. It is a good thing that banks are not lending, are lending scarcely, are lending less, because this way speculative ordering by ship owners is prevented, is minimized. And this is the only way to ensure the sustainability and the survival of shipping, and in particular Greek shipping. Conclusion, well, my conclusion, ladies and gentlemen, is no different to what every Greek ship owner would tell you here if he was asked, but it has taken me 19 slides and 10 minutes to arrive at the same conclusion. Cash is king. Thank you.
Thank you so very much. And now, friend Nikos Tsakos kindly invited for his intervention. Nikos.
Well, thank you very much, Chairman, Natalie, Nick, for giving me the possibility to be here. I see a great crowd, and it shows that the market is really bad. Everyone is here for a free drink. So I think this is I don't want to stay between you and your free drinks very much. And never seen this room so full. So this is a good opportunity. I think what we have heard from all our speakers so far. I think Mr. Anagnostopoulos, George Xiradakis, on the banking side, was very important because it shows that actually shipping, the shipping business is a partnership, and it's a business of shared responsibility. And I think Dimitris and George talked about sharing the responsibility as far as ship owners and their bankers would do it. I think the charterers, the insurance, the flag states, the shipyards, the brokers, they're all part of one chain of responsibility that we bring up, I would say, a very important and desired service is moving products around the world. And I will I think, focus more on what Mr. Hammer spoke, only on the tanker side, whereas perhaps the responsibility of doing this job is even higher because of the sensitivity of the cargo. And I think whereas the bankers, and I see quite a few of them around this room, I don't see that many charterers, and I'm worried about that, but this is a separate case. I think as the ship owners are doing, I would say, the hard job, but they have to be assisted by all the other chains of responsibility. And I think we are doing this job for our clients. Our clients are the charterers. And I think in the tanker business, it's a very, very sensitive service we provide, a very dangerous service. Our seafarers and all the people involved put their name and their reputation and stick their neck to provide a flawless operation. And looking back over the last 20 years, since we came out of the whole industry actually self-regulated itself by getting out of the double-double of the single vessels and created a whole new type of vessel, the double-double, self-financed by the owners. And at this stage, we need the charterers, the major oil companies, to take more responsibility of the service we provide and at least start paying at least a minimum level and rate for this very expensive service and a sensitive service, because we are worried as the market, and I think all the speakers and Mr. Boduroglu and spoke that as the earnings of the companies become less and less, we are worried as an industry that people will start cutting corners when they provide the service. And as I was saying, George, when you were out smoking cigarette, it is the bankers are asked to share the responsibility, and from what we see, a lot of the banks are taking these roles. But in the very fragmented business we work, mainly on the tanker side, many of our charterers, the major oil companies, do not have in their boardroom, they talk about safety, they talk about quality of service, they talk about the environment, and they're very happy to charter an Aframax Cross-Med at minus $2,000 a day, or minus on a VLCC minus $5,000 a day. Of course, then we have to ask only the question, why do owners accept these rates? But this, we need psychoanalysis to be able to, so let's see what the other people can do for us and not what we can do for ourselves. So I think we are having a discussion, and Mr. Platsidakis also and I sit on the board of Intertango, which tries to unify the very weak voice of tanker owners against our clients, and it's not really against our clients because our clients are the major oil companies, so there are not that many of them. And we bring them the example of a taxi. When you get in a taxi, there's usually a minimum rate that you have to pay the taxi driver. In many cases, in tanker shipping, and not only, you actually have to pay the taxi driver after you arrive to your destination. So I think there must be some correction in this and sharing of responsibility. There have been, during the times of crisis, there have been, unfortunately, a lot of environmental disasters, mainly with oil major companies' vessels. And we are worried that the industry has made such a good name of itself if the very low rates, and I'm specifically talking about the tanker industry, but I think this has to do also with with the dry cargo and container industry. If we do not have some respectable rates, I think then we will see more and more danger of putting a bad reputation on what we have achieved. Intertanko and the Union of Tanker Owners is trying to take some efforts to raise the awareness. We are sure that the main board of directors and the executive directors of the large oil companies do not, and we know they do not understand at what state the market is, where you have the young employees of a major oil company trying to undercut the market, and they get enjoyment getting negative returns from private fixings or from fixings of the market. One way that we're looking perhaps to achieve this is the complicated structure of the word scale for those of you that have studied word scale in the course. I mean, as you understand, word scale is a percentage basis. It's not as simple as dry cargo where you get $4,000, $5,000, $6,000, $7,000 a day, and you know that your operating expenses are, $4,000 or $5,000 a day. So if you achieve, if you're only earning $2,000, you're actually not even covering operating expenses. The world scale is a percentage point that does not really give you this transparency. So when people, I don't know how many of you, I see our chartering people, I'm sure they do not know, but I know that you have a lot of people from chartering here, that if you say word scale 25 from a trip from the east to west on a VLCC, I don't know how many people know to what time charter rate this equates today. Actually, it's, Nico, it's what, equivalent to minus 12,000 or something like that. It sounds better when you say word scale 25, but not that many people know. So I think we need, as the bankers are sharing the responsibility, the flag states, the insurance, the major oil companies have to start sharing the responsibility on the tanker side. At the end of the day, of course, we are big boys, the ship owners, I hope, and we all know that no one really put a gun on our head to oversupply the market with ships. But as George previously said, shipping is a very important service, and I think it has to be given this importance by its clients. Well, thank you very much, Chairman, for the intervention.
Thank you very much. Now our last speaker is Mr. John Xiradakis. Apologies for Nikos. I didn't mention that, of course, he's the Chief Executive Officer and President of Tsakos Energy Navigation, so my apologies.
You should apologize, you stole all my slides.
Yeah, all right, but still, you're very kind. So, Yannis Xiradakis, Managing Director of Anagnostopoulos Maritime Services. Yannis, the word to you. And Yanni mu, apologies. Our chairman of Intertargo.
It's good to have you, George. Ladies and gentlemen, good evening. Being the last one of the speakers, I decided to come up with a challenging, if not provocative, subject. The subject is a crisis welcome? Ancient Greeks, and not only them, consider happening events as the desire and wish of gods, and as an expression of their feelings through the meanings and messages they were passing on to humans. Many years have passed by since then, and the ego of people has increased to such an extent that they believe that they themselves shape the events, and are upset when they consider that such events are not favorable to them. It is not my desire to explain, and certainly not to express an opinion for the transformation of mankind and its approach to life. Therefore, I will concentrate on a feelingless analysis of the present crisis of the shipping market, which I believe has great similarities to the crisis our country is presently facing. It is in the human nature to believe that the present and standing favorable situation will continue in the future, and to the contrary, an unfavorable and long-standing situation will continue as such in the future. In other words, the extrapolation of optimism and pessimism in the future. Shipping enjoyed a very rewarding market for a long time and came to believe that the constantly improving market will continue for long, if not forever. The shipping investments were becoming more expensive as time was progressing, The banks were anxious not to fail to meet their augmented budgets and targets. New shipyards were established to accommodate the demand for new ships. Ship owners, anxious to be on board the fast-moving train, were placing orders for new vessels with the expectation that their values and earnings will continue to improve. Companies went public on the enthusiasm of investors to come on board the very same train with shipyards, ship owners, and banks. And then the dream was over. The ships proved to be far too many for the available cargoes. The cargoes themselves were reduced as the world economy slowed down. The banks found themselves full of problematic loans, on top of products which they thought they understood, but they did not. Good morning, crisis. Having the undisputable competitive advantage of my age, vis-à-vis many of you, but not all of you, I will refer to another shipping crisis, the one in the 80s. A shipping crisis deeper and more desperate than the one today. Despite all the sufferings and losses which a number of shipping companies suffered, Greek shipping continued its route, improved, upgraded, reshaped, prospered, and reached the enviable position of leading world shipping. New companies were established, cheap investments on ships were made, which created wealth. After some years, newer ships replaced older ones. However, beyond those investments, the great and valuable contribution of the crisis in the 80s was the initiation of a deep assessment of the then practices of ship management. It woke up in the minds of the Greek ship owners, office staff, and seamen the self-survival emotion and the need for them to adapt to the new environment by evaluating the then parameters. We, Hellenes, do not constitute a blessed race, but we have proved over time that we have an immense capability to adapt and excel when found in difficulties and have to fight for survival. I'm very optimistic that the present crisis will give us all the opportunity not only to renew and expand our fleets, but also to improve and enhance our ship management skills. I want to underline that the business we're in does not have a substitute. World shipping does not have competitors who are able to transport world trade in mass and in a more competitive and efficient way. Shipping has its own self-cleansing mechanism which lead it out of crisis. This is a fact. Concluding, I want to remark to the great similarities I see of the present shipping crisis and the crisis our country is facing. I hope the future of the latter will be the same as the former. Thank you very much for your attention.
Thank you very much. I think that Mr. Tsakos made the summary of all what has been mentioned before, and then it was quite important that Mr. Platzidakis concluded with a tenor and tenant of optimism. But now I think that it's the right moment for the floor to come to you and the panel ready to receive your questions and points. So please, whoever wants to ask something, identify him or herself, and then we'll revert. Each one has a microphone in front of you, so you raise the hand to take the question, please. Yes.
This is directed to Gianni Platzidakis. First of all, I commend all of you for your wonderful speeches. You were very informative, and I think all the younger people here are learning something besides us who are in the middle. What are the differences from the 80s and now in the crisis that we are suffering? There are some differences, I'm sure, that differentiate the whole thing, the way you said it.
Certainly. I still believe that the present crisis is a more healthy market in the sense that in the 80s, most companies didn't have any liquidity. I would say that as a general view, I believe that the liquidity of Greek shipping is good today, overall.
Through the floor to Mr. Ole, but also Simon, because I think the question about the, it will be a good, I think, example if you could, I mean, if you remember, hopefully we were all very young at the time, the previous crisis lasted between 81 and I would say 87. If you wanted to put the timing, which year of the previous crisis are we today? Are we in 84? Are we in 86? I hope we are not in 82, because if we are not in 82, I think, then I think it's not very good. But anyway, without wanting to influence you, according to your statistics, which year of the previous crisis you believe we are today?
I would say we are in the 84, maybe 85 period. If you look back to that period, we had some difficult times in the mid-80s, but didn't really start moving until we saw the collapse in oil prices, which began in 1985. And as I was saying in my presentation, we think that 2013, may be a year, kind of a crunch year for shipping, or at least for the tankers, because we have a very limited amount of flexibility in the system today in terms of what the banks can give us, what the yards can give us, and what the flexibility of the owners. We have been stretched in the last few years because the concessions were made in 2008, 2009, as my colleagues here were discussing, from the banks, hoping that we would be seeing an upturn by 2012 to 2013. So when we're not seeing that upturn yet, we have sort of, we may be in the process now of getting into a crunch period. And that was the same thing as in 1985 with the oil price being held up and not able to respond to changes in the market. And it was the break of the oil price that kind of got the overall market going. So I would put us at 1985, where we have done a lot of the downside work, but we may be one event away from getting the final shakeout. That's my answer.
For dry, I would first comment on the dread word of Sanko. History repeats itself, first as tragedy and then as farce. And Sanko was a sign of the second wave, if you want, of the mid-80s crisis. And maybe, the Sanko restructuring is the sign of this second phase. I'm not as optimistic. I think we're in 1984. I think there's still a lot of restructuring to happen. I think there's still a lot of ships to go for scrap, purely driven by the fact that they're not earning enough money, and there's no sign of them earning enough money. So
big difference, eh?
Yeah.
Nico, why you raise these questions?
I was 20 in 1984, so it makes me feel young again, you understand?
Actually, you were 21, not 20. 20 I was myself. You remember? And I was in Japan with a ship. But then 10 years later, we went together. Anyhow, Dimitris, may I raise a question to my colleague here?
Please do.
Thank you very much, Mr. Chairman. Dimitris, being a banker, the board of the only, if I can say, safe Greek bank, it's the only bank that is not affected heavily by the Greek crisis. How do you think that the local market will behave from now on with all these fears that we have? And I remember many journalists called me yesterday, today, that they say about the new commissioners go to control the Greek banking sector, the Greek banks, because of their replenishment of liquidity. How do you feel that the Greek banks will behave from now on?
Well, indeed, the bank that I work, the reason that is has ample capital adequacy, 33%, which is a rare commodity these days, and the fact that it's involved only in shipping, that proves what I was saying earlier and what everybody said, that shipping is insulated from the Greek crisis. What is happening with the banks, this is the whole story, is that most of the Greek banks had exactly the two symptoms. The one symptom was that they have been directly hit by PSI, so they have to take a huge amount of losses. Second hit was that deposits left, a substantial amount of deposits, so they had to be recapitalized. There's a third one that nobody dares to talk about, that many loans were not very prudent in the sense that they've been creating an over-leveraged position for not only for the consumers, but also for corporates, large corporates in Greece. And at the same time, they were privileged, in quotes, granting of loans to the old-fashioned system of the απλοκής. I don't know how I can say that in English. So today...
multiple connection.
Yeah, whatever. So the banks have to become not nationalized, but will be troikanized, because the funds from the EFSF will come to recapitalize the bank so the system will not collapse. And the latest fashion is that the governor that will be appointed by Troika, by our lenders ultimately, is to make sure that the banks will do what they had to do in the first place, and they didn't do it. And I think that's a positive issue if you take that on a purely technical approach. So at the end of the day, I think, like John Platsidakis said, we'll see things that they will put on track, and that is painful for a lot of people, and mostly for the bankers that they have. They will lose their banks basically because they don't have the funds to bridge that gap. The end of the day will be positive, but it should take some time for that, a few years.
Let's hope that banks will do both things right and the right things. So, Mr. Tsavliris, please.
Yes, thank you. I would like to ask what may sound a very silly question, but I think I'd like to ask it. If it is a fact, what we've seen here, all these statistics and the fact that the industry is cyclical, then why do people make these very severe mistakes? Why do you pay $85 million for a ship which cost 25 to build, when you don't know if the charter will pay, you don't know what's going to happen? Why does the bank lend the money? Why do the investors put up the money? Why does the ship owner want to acquire the ship and operate it on this basis? The risks sound to be so high when we've seen these developments that it's something that ought not to be done. So how can we explain that it does in fact happen? Why do they do it? Why do they do it?
Use your microphone, say your name. Anagnostopoulos, I said. Well, your microphone is for the... It also is other priorities.
See, Alexander, we know we're going to be locked into, most probably locked into this situation. So why do it in the first place?
So what I just wanted to say is that from what we've seen during the good years of shipping, people who did what you just said probably didn't leave the crisis in the 80s on the one hand, or had not studied the crisis of the 80s. I believe that traditional ship owners in that period did not do that, or did it in a very small portion. So, which means that their exposure was small. That's my opinion about what you said.
Well, Alexander Rexton did it.
I beg your pardon?
Rexton had 100 ships. He was the tycoon.
No, I'm talking about Greek ship owners.
Oh, the Greeks. Well,
yes.
shipping.
Yes. I'm talking about our race.
Then, thank you very much. I know, but let's keep the procedure. Oh.
Excuse me. Proud to be single Norwegian here among the Greeks. And what I could bring to the table then maybe is to study, if not Norwegian, at least Scandinavian literature. And I would recommend reading the old tale from H.C. Andersen of The Emperor's New Clothes, which is the story of all markets of basically of delusion and mankind's ability to delude himself. And that's what I was saying also, that the analyst value diminishes as we get further.
Expensive assets, and now they find themselves in big problems. They also did that in previous times. I remember when I first started my career, big, colossal firms those days, they were going bankrupt. I mean, obviously they had done something wrong to go bankrupt. I also recall people speaking in fora in 2004 and 2005, saying that publicly, that shipping now is not what it used to be. It was now playing at a different level, and asset values and charter rates will never go back to what they were before, because for the first time in history, we have God knows how many billion people in China and elsewhere joining the market, and you know, not joining the market, but joining the Western consumer sort of habits, and therefore this thing would be unstoppable. And as with all things in business, you know, it's a race against time. You hope that, you know, the good times will last longer than usual, than in the past. Don't forget also that we also had hedging tools for the first time that we didn't have before. So even charterers that were exposing themselves long-term, you know, at high rates, let me correct that, they thought that they were buying a hedge by buying FFAs from a counterpart, of course, which we saw eventually that that didn't work when the market collapsed. A lot of people lost their money. They thought they hedged, they thought that they hedged, but in reality they had not. And finalizing, I say, this is capitalism. You know, in crisis, people fail, people get reborn.
Because unless there is, because then Mr. Platstakis wants to make a comment and then take another 2 or 3, and Mr. Xiradakis. So try to concentrate it a bit, but please.
No, I just wanted to mention that the 80s crisis, as we all know, was something new. And what we've seen actually in the 2000s was something that, well, I was too young at the time, but you know, I've learned about it, and we should all have learned about it. So the people who faced problems in the 80s had no jurisprudence, let's say, about nothing similar had happened before. Actually, Greek shipping was too young even at the time to learn from the mistakes. But I believe that people, you know, in the 2000s should have learned about the mistakes that were made in the 80s. And, well, some people did, some people didn't. So,
thank you very much.
Mr. Platstakis, your comment, please. Being in business and decision-making, we are all deemed to make mistakes. There's no doubt about it, and the same applies to shipping. The 80s was not a young or a new crisis. It was the 70s, another one before, and many more before. I think what went wrong in the 2000s something was that a number of Greek shipping companies that, to the best of their ability, they were ready to buy a vessel of at least 10 years old. They came to start ordering new buildings. And I think that was a target far too far. it is inevitable. I don't think we have to say that because we are Greeks who don't make mistakes or because we didn't learn in the 80s. The people that made mistakes in the 80s didn't learn from the 70s and so on. It's a history that repeats itself.
Thank you very much. Mr. Xiradakis.
Yeah. What I want to
we'll
add...
complete the circle.
Pardon me?
Yes, and if we complete this...
Yes, what I want to add is that everybody has to understand one thing. Up to 2008, and up to the collapse of the Lehman Brothers, and for the more clevers, if I can say, or the more technocrats, up to August of 2007, when we have the subprime crisis in the Americas, we had the first phase of globalization. The world economy has become completely different between 2000 to 2008, and we changed completely. Now we are in the second phase of globalization, with different economies arising, different economies collapsing, different rules or even trading patterns. The specialists here, they told us that most probably America will stop importing energy. And rather, we read yesterday that most probably Americas will be an exporting countries. So what we have learned 30 years ago in the universities or by working in shipping has changed completely. The last thing that we can do, my friend, is to accuse ourselves on whether we order or whether we finance heavily in 2004 or 2005. The μετάχριστον prophetis is very easy to make money. And I don't want to make a dialogue or to continue. We can continue outside. Thank you very much.
Thank you very much. We'll take the last three questions, Mr. Tomasos, Mr. Patrikios, and then we designate now Mrs. Pavlopoulou, and we hope that the next questions will be in the next opportunity. So, Mr. Tomasos, thank you.
Hello. I have a question to Mr. Anagnostopoulos, but in general to the panel. In relation to the leverage of the Greek shipping, during the Tradewinds Forum in Posidonia this year, Martin Stopford, the ex-Clarkson guru, etc., mentioned that the value of the Greek fleet, at 3,000 whatever vessel, is approximately $200 billion. And then I asked him, and after to be truth, after the conference, yes, but it's only 200 billion. Yes, I'm sure. He says it's 200 billion. I said, okay, but the loans of the Greeks is also, as I read from the Petrofin analysis or from Mr. Xiradakis or whatever, is around also 200 billion. So I was a little bit puzzled with the degree of the leverage, or in any case, about the net asset value of the Greek ship owners. Do you have any, knowledge from your end about the worth of the Greek fleet and the relevant values of the loans? Thank you.
Well, I don't. You mentioned about 200 billion, the value of the fleets.
That's what Martin Stopford mentioned in the trade ship forums during Posidonia.
Well, what we know is that the total debt of the Greek, the total leverage of the Greek assets, about 65 billion. And of course, the value at a certain point could be 200 billion, but taking certain averages. Today, the situation is that values have dropped substantially, and if we do the same exercise today, we might find that by average, again, I'm talking, maybe half, maybe at 100 million.
So what's the value now, let's say?
It could be 100 billion.
100 billion.
Maybe.
And the loans?
The loans still the same.
I didn't hear 65.
They don't reduce easily, the loans. Yes. Values have reduced.
Because I thought that it's much more the loans of the Greeks, around approximately 100 billion, 150.
No. The distinction that we should make is that there are companies that, although they have lost value in their fleet, in terms of value today, as Michael Boudouros said, they have no debt or very, very low debt. And there are some other companies that they have debt which is much more than the values of their vessels. So negative equity is not only for listed companies, but it's also for private companies that they have this problem. And to add something about the crisis of the 80s and the crisis of today, is that in the crisis of the 80s was only shipping that suffered. Banks were healthy, so they were able to take substantial amount of write-offs immediately. These days, they cannot pull the plug. It's impossible, because if they pull the plug, they will need immediately capital, and then it's the vicious circle on that.
Yeah, but the timing is coming to be able to take the loss of a small industry like shipping. We didn't have the time in 2008 or 2009. Now it's more scaring.
Well, it depends on the pockets of the EU banks, I mean EU Central Bank and the Fed, etc., to supplement all these deficits. So it's a situation is not very very healthy.
Thank you very much. I think it was a very refreshing clarification, because Mr. Tomasso's question was like thunderstorming in a way. So, Mr. Patrikios, please.
Okay. Mr. Vodouroglou said cash is king, which reminds me back to basics. And this is compared to credit was king in the 2003 and 1 decade ago. And from 2003, we ventured in a world of high leverage. And suddenly, now we live in a world of deleveraging of the world economies. And this which has the repercussions, it's a pain in the neck of shipping. How long this deleveraging of the economies, the world economies, will last? Because the numbers, Mr. Anagnostopoulos said that the derivatives, you mentioned a scary number. How many times is the world GDP?
Oh, it's very scary. I mean,
it's a scary number. I mean,
paper economy is 50 times more than the real economy, and we don't know how long that will go. That's impossible.
Is it true that we live now, we have a deleveraging of the world economies? And this has a repercussion in the shipping?
Well, we have certainly the leverage of the banks, which is necessary to stabilize things, but that is in the detriment of businesses and world, growth. We don't know.
Mr. Chairman, can I say something? First of all, I have to tell you that Mr. Vodouroglou made a mistake. It was very clever to say about king and money in Holland, where they have kingdom. But here, we have abolished both the kingdom and the money. We don't have anything. All right? He has to change, to think about something else. Okay, Mike? All right. Second thing, your question, do you understand? To simplify the matters, what you ask Professor Dimitris, because he is a professor because of ourselves, the shipping financiers, we call him professor, all right, and not because he passed the university and he got a paper. It's ourselves that we call him professor. Is you ask whether capitalism will sustain, will remain, and will dictate the future of the world economy. This is what you are asking. The question is very simple, and we do not see, any sign that the capitalistic system will fail as soon as even the developing countries, they are running after it. This is my view.
Thank you very much. We'll take the last two because I will be totally failed. Okay, okay, two, and that's it. Mrs. Pavlopoulou, Mr. Goudomichalis, and we'll try to be a bit concise because we exceeded our academic quarter. Thank you.
Okay. I will just remind you a nightmare that is going to come. It's about sustainability reports. The supply chain is, yes, okay. Well, I'm a sustainability report verifier for Lloyd's Register. I'm trained on that. So this is supposed to come in the next years, probably more soon, because the supply chain needs to transport the commodities and all the cargo with the eco-efficient ships. So once they draft their sustainability report, they will request, what are you doing? So there are a lot of initiatives from the Scandinavians and the US Green Award that they're ranking and scoring vessels and shipping companies. I would like to ask the Greek ship owners, just because we're really a very nice and cozy family, what are they responding, and if they are using also marketing mechanisms to respond in that challenge? It's the supply, the suppliers, the charters challenge, meaning.
Can you repeat the question
Okay.
shortly?
Yes. Sure. You're amazing. You won't intimidate me. No way. So for the time being, I know that CSR is quite not a good term, and you avoid understanding what exactly it is. So there are many definitions. One of them is what do you do for the social, environmental, and corporate governance, corruption, human rights, all that. So these should be drafted, these should be measured and monitored, and the performance should be in a sustainability report. So I'm saying that the supply chain, the suppliers and the charters request that. What do you plan to do?
By CSR, you mean the corporate social responsibility.
Yes. Yeah.
I think this is part of any company. It is a new philosophy of approach to business. It doesn't apply only to shipping. When charters are talking about CSR, most probably they are talking to not necessarily to ship owners, but to some third parties, and that's why you see the recent initiative of RightShip and that carbon war room or whatever it's called. It has nothing to do. I mean, what they said is common sense.
But they lead the regulation. The problem is that...
No, they don't. It's a private entity. They have their own procedures.
I'm afraid that the Greek shipping has a lot of views, and they just don't present in fora in the right way. That is my
Anyhow,
point.
thank you very much for your intervention. I think everybody in the audience followed very carefully.
Mrs. Pavlopoulou knows that we are doing CSR. You've seen that, haven't you? Especially when we had money. The charters don't pay anymore for these things.
Sorry, Mr. Bourdomichalis, the last question.
No question, nothing difficult like Yana put. Dimitri, I noted socialist undertones in your presentation. You talked about wealth concentration, the need for wealth redistribution, and the fact that everything is the fault of quantitative easing in the States. You missed out the fact that we've had inefficient public spending in Europe and in many other places in the world, with inefficient welfare states, etc., which have equally contributed to the problem, just as a comment. George, 4 out of the 10 banks were American. There's a third knight missing, and a cowboy and a thoroughbred Mustang, right? So you've got to put that in. And Nikos, you mentioned minimum earnings, and you talked about the concept of a taxi driver. I would have no problem with minimum earnings as long as they're market determined, and under no circumstances would you put any type of regional, international, or governmental involvement in that, because that would mean giving up basic market dynamics. if we can do that.
When I mention, because we have discussed this in Intertango, when we discuss about the minimum earnings, it only covers the operating expenses of each vessel. And you can look at Ernst Young, all of them come up with what is the average operating expenses of an Aframax, 6,000, 7,000, and that's where world scale should start with 0 from there. The market would not stop you from chartering world scale minus.
Exactly.
But that will go to the boardroom of the major oil company, because that they will finally figure out why are we chartering minus world scale. So you cannot stop the market. You can readjust the world scale to include the operating expenses of it. That's the only responsibility we would be asking from major oil companies is operating expenses. If I order the ship at 150 million on somebody else at 50 and he has different costs, it's his own problem.
Unfortunately, in this business, one man's plight is another man's opportunity, and that is one of the basic dynamics of a market that works with demand and supply. And as long as we do it as owners and not in the form of a cartel, but in the form of understanding, it's okay. Anything else that challenges the free market base, the free market principles of our industry would be, I think, catastrophic.
Could I ask you something? I think what Mr. Tsakos means that he's not going to fix the rate. He wants the boardroom of the oil company to know that they're fixing it at below cost. Is that right? He doesn't want to fix any market rates. He just wants to bring to the attention of the chartering.
They probably don't, which they probably don't. They probably don't.
John and others here, we've been to meetings with major oil companies, the actual chairman of the oil companies, and they have, I mean, when we asked, they were shocked. They said, are we really paying negative? Yeah, I mean, they have no idea. And because you have the independent directors with huge liabilities in case of pollution, these guys should find out and they will deal with it themselves.
I may rephrase it. Sorry.
Please, Yanni.
If I may rephrase it, the world scale in the tanker industry does not provide the transparency to a third party to realize what is the income capacity of the vessel. While if you look at the time charter, it's an easy reference to the operating expense of the vessel.
Thank you so very much. The word, Mrs. Mariolis Komnos. Thank you very much for your attention.
Σας ευχαριστούμε πάρα πολύ. Before the closing of our forum, I would like to proceed with the award presentation of the candidates that distinguished at the ICS examinations of April 2012. I am really proud to mention that this year, more than 500 shipping executives attended the ICS professional training programs. Also, it is worth to say that this significant participation confirmed the fact that despite the global shipping recession, the maritime industry and individuals recognize the value of investment in professional training. At this point, I would like to ask Mr. Eugenides Dimitriadis to come to award Mr. Evangelos Tsapelas from NEDA Maritime Agency Company, who distinguished at the ICS examinations in shipping business 2012. I have to say that NEDA Maritime, it's the second award. An honorary award will be given to Mr. Konstantinos Glezelis for his distinction in the Shipping Finance Examination 2012. I would like to ask our chairman, Mr. Nicolas Tsavliris, to proceed the award. I would like to thank everybody that contributed in the organization of our event. Our chairman, Mr. Nicolas Tsavliris, for his valuable support and generous provision. My colleagues at HMC, Mr. Leonidas Eugenides Dimitriadis, and the personnel of the Eugenides Foundation, the panel of our speakers for their enlightening approach to the topic and the thoughts that they share with us. And last but not least, I would like to thank our sponsors, AB Maritime, Arrow Shipping Hellas, Aspida Maritime Security, Capital Ship Management, Chartwell Shipping Company, Eastern Mediterranean Maritime, Element Ship Management, European Navigation, GAC Shipping, Hartland Shipping Services, Holman Fenwick Whelan, LLP, Marshall Islands Registry, Marine Plus, Paragon Shipping, Peninsula Petroleum, Springfield Shipping, Target Marine, Chacos Energy Navigation, Tsavliris Salvage Group, Ursa Chart, and Varchilla Greece. We are looking forward to welcome you at the 9th Annual Forum of the ICS Greek branch. A buffet dinner will follow, and we are looking forward to be all together. I would like to ask you something. There is a charity organization outside, and I really like those days where the Christmas are coming. Just €5 each of us. We are so many people, and it will really be worth for the charity. Thank you very, very much for your attendance, and I am looking forward to see you on our next annual forum. Thank you very much.